I'm Nick Snow, watching Government for Oil and Gas Journal in Washington, D.C. As the U.S. Senate moved toward its March 29th vote on legislation which would have raised the nation's 5 biggest oil companies' federal taxes, 4 experts reminded the Energy and Natural Resources Committee that forces driving global oil markets are still beyond Congress's control. Howard K. Gruenspect, acting administrator at the U.S. Energy Information Administration, said that EIA expected crude oil costs to remain the major influence on gasoline and diesel fuel prices through the end of 2013. Significant uncertainties could push crude prices higher or lower than expected, Gruenspect continued. He said that a number of producers outside the Organization of Petroleum Exporting Countries are currently undergoing supply disruptions. Oil prices could be higher than projected if current disruptions intensify. New non-OPEC projects come online more slowly than expected, or OPEC members do not increase production, Gruenspect added. On the demand side, if the pace of global economic growth fails to recover in Organization for Economic Cooperation in Development countries, or if economic growth slows in non-OECD countries, prices could be lower. Daniel Yergin, chairman of IHS Cambridge Energy Research Associates, suggested that geopolitics, specifically rising tension over Iran, have come to be the dominant factor in pushing world oil prices higher. It is the prospect of Iranian barrels dropping out of the relatively tight market and not being replaced that is affecting crude oil prices, he said. Saudi Arabia, with almost all of the world's spare capacity, would be able to fill a 2 million barrel a day supply gap, but this could alarm the market, he testified. Additional supplies could come from Iraq, Libya, Angola, Colombia, Canada, and the U.S. over the next year, but they could not be called on immediately in a major supply disruption, Yergin said. Frank A. Verrastro, director of the Energy and National Security Program at the Center for Strategic and International Studies, said that at least in the near term, the global market's psychology supports keeping prices elevated. One glimmer of hope is that if the Iranian confrontation can be peacefully diffused, we could find ourselves with, at least temporarily, an oversupply in the market, possibly enough to temper the current bullish sentiment before doing economic damage, he said. Paul Horsnell, who leads commodity research at Barclays Capital London, said the closing refineries with high gasoline yields on the U.S. East Coast and in the Caribbean means that most of the U.S. Northeast's gasoline needs will be met by imports or more shipments from the Gulf Coast. Market price dynamics could provide incentives for imports to meet any potential gaps in the next 3 months, he indicated. High prices apparently didn't stifle gasoline demand growth last month. The American Petroleum Institute reported on April 20th that it grew year to year for a second consecutive month in March, as total product deliveries fell 1.3% from levels a year earlier. The mixed demand picture shows the economy is still laboring to move forward, reflecting relatively weak employment conditions, API chief economist John Felmy said. However, the rise in gasoline demand occurred in spite of higher gasoline prices, which actually pushed down demand for reformulated gasoline used in urban areas and encouraged more use of public transit. In its latest short-term energy outlook on April 10th, EIA lowered the forecast 2012 average U.S. refiner acquisition cost of crude oil by $2 per barrel, from March's outlook to $112 per barrel, still $10 higher than last year's average price. During the April through September summer driving season this year, it said that it expects retail prices for regular gasoline to average about $3.95 per gallon nationwide, peaking in May at a monthly average price of $4.01. EIA expects regular gasoline retail prices to average $3.81 per gallon nationwide in 2012 and $3.73 in 2013, compared with $3.53 in 2011. That's Watching Government for this week. In Washington, I'm Nick Snow for Oil and Gas Journal.